Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. Well, we came in today, the futures are down 7-8 handles, a little weakness overseas, and the question was, can we hold higher? Will the 8-day moving average that's been supported in the S&P continue to be the roadmap? Can we hold the old 2016 high that we just got above? Because if we didn't hold it and we closed strongly below it, there would have been a lot of technicians, maybe even including me, thinking that we just did a false breakout. And it made a little sense considering there was no power, it was pretty lethargic, and not a lot of volume up here and a lot of interest. But we came in today, some technology names acted okay, things didn't fall apart, we reversed up to finish off lows, and it seems as if every time the sellers have their chance to press, they haven't been able to. But it doesn't mean you could blindly buy things either. So it's really a very precise tape right now where you have to pick and choose your spots and pick what you want to be in for a reason. If you go to the chart of the SPX, you will see, okay, this was the prior high. Remember this prior high? So at this point, doing some work above it is healthy. No one wanted to see a push through, break back below, because what that does is that makes you, give you a false bull trap type of, scenario. Technically, you had a test right here where the bears were trying to press this 2090 and they weren't able to, and that's what led us to a move up here. And now the question is, can we basically hold this spot? Let me just get it a little closer for you. For a session or so, and then make an attempt to go to all-time highs. So what do we do today? We got some price discovery. 2107 is now your new pivot to trade against. That is your 8-day. I actually circled this on the chart today. I put a chart out there every morning. You should look at it around 8:30 on my Twitter. Here's the prior high. So as of right now, we held it. So as long as we hold above this, if you read my note, I'll say you can't get too bearish as long as we stay above 2107 for now. Okay, and then we'll see how long it takes to flag maybe for another move. What I wanted to see today was a little rotation back into tech. It didn't really happen with authority, but you look at the Qs still look pretty good. Okay, very tight. Not leading the market, but today they could have broken the Qs down, okay, because they've been showing relative weakness. This is where your 2016 highs are. We're not near there or above there, so it's still hanging in there. So if the bulls want to take the next round with another sector, it'd be nice if it's the Qs, and that would be better for traders. It's still holding the 8-day. It looks okay. I also mentioned this morning, could the XLE hold its prior 2016 high? So my theme was, could old resistance turn into new support? Okay, and if you look at the XLE, you will see that as of now, not so bad, right? Here was the beginning of the week. This was your pennant break to the upside. 1, 2, third day, take some profits. Then you go sideways across here to see if we could hold. And as of right now, it tried to hold in there. Maybe another few days, and then it turns back up. We shall see. Oil, hopefully holds, around 50 for now. Then you go to some names. Yesterday, Google woke up a little bit. I went long overnight, and I stayed in all day. It wasn't easy, but I would say constructive. Okay, constructive for Google for now. Constructive for Google for now. Oh my, it's like lions and tigers and bears. Anyway, here we go. Still above this ascending channel. Here was your move, and now you have a 2-day pivot, to trade against. Last time it broke above this ascending channel. You had a decent move up to the old gap. Now we'll see if that's the case here. Not leading the market, but still acting okay. Okay, we'll see if we can get above this 744-ish tomorrow. That would be nice. Another down open would be annoying, but we'll see. Okay, if you go to Amazon, Amazon still, is doing pretty well. There's been no, stretch and no real power yet, but it's still above the 8-day moving average. It's still acting well. It's still above this gap here, and it's a stone throw away from all-time highs. Maybe at some point we get above this 730, 731, and they squeeze. I actually nibbled a little bit towards the close because I'm thinking, it held in there today. And then you have our nemesis. It's been our nemesis for a little while because it's been in this tight range, but it's been really good to us the last year and a half, and that's why we continue to watch, and that's Facebook. Facebook not doing anything special. What's it doing? It's still holding this support. It just held a little bit higher within this range, and now it'd be really nice if it could take this out. Okay, we'll see if at some point some kind of news or something could get it going. It closed pretty well today. I'm still in that. It's getting a little annoying, but we'll see what happens there. Apple, I wasn't long it today. I bought it while it was negative and had a decent move. It's got a decent flag up here. Okay, remember the chart that I posted here? At 96.80, I said that had a hold. It did. Now it's trying to hold higher. So we'll see if Apple could help lead tech. How would that lead tech? Get above this and continue to the upside would be nice for Apple. Okay, and that would also be good for the Qs and healthier for things. You know, look at NVDA. NVDA, I tried shorting it yesterday. It didn't go down. You know what? If it doesn't go down, maybe it's ready to go up. And this is still healthy action here for NVIDIA. As far as other sectors, okay, the bios did break 277, but I think it held my other area I talked about, which was 271, you know, from my note. Okay, bios got rejected right here, okay, and broke below this, and now tomorrow you'll see if maybe you get a red dog reversal around it or something. But it loves trading in these ascending channels. This one broke to the downside. You could go back so many times in the bios. You know, when they're hot, they're fun, but you got to make sure once the music stops, you're out of the way. Here was one ascending channel to the downside, another ascending channel to the downside, another ascending channel to the downside. So now this needs to hold higher to get, you know, any kind of traction to go again. We'll see. I did buy this, just kind of for fun at the end of the day. Hopefully, you know, it's not fun, but you know, whenever this thing gets going, you know, there's still a lot of people behind it. You go here to insert study, you go to volume, and if you ever trade a little guy, you got to make sure that there's volume attached on that day. And let's see, did I do it wrong here? Where is the volume? That's, you know, I guess you could see kind of here, you know, that's pretty big volume compared to what it's been. So we'll see if it leads to another day. As you can see, I'm kind of, you know, reaching a little bit because, you know, some of our names are just not having the punch that we want. So, you know, I'm in some of the names, but I see these little guys, these little stocks that, you know, have a big volume up day, and the next day they're up 25%. So, you know, I don't usually do that game, but whatever, I'm in a little bit. Then you had Tesla today. Tesla, some news about the transmission. All in all, still looks fine. I think it could create an opportunity. You know, I did sell my Tesla yesterday, and then now today, I think it's still fine. We'll hopefully see it hold this spot, okay? Tomorrow we'll look at it versus 227 to see whether or not, you know, there's a nice buyable dip. But overall, Tesla was good to us this week. You know, nice calculated trade. You know, when it got above the red dog reversal here, and then triggered above your, you know, 222, and then this was the target, which used to be support, which turns into resistance. What a coinky dink. And now I figured it needed to pack and fill a little bit, so the news today brought it down a little further. I still like it, and maybe there's a better opportunity, a cleaner opportunity tomorrow there for option expiration. So, with all that said, you know, they're not giving away money on trees, which they never do. Okay, the market, we're heading into the summer. You have the Fed next week. We have Brexit the week after that. We're going to find out whether the Chinese market's going to be included in the MCSI indices, I think some point next week too. I'm not sure the exact date. You know, we're getting some decent action here and there throughout the course of a day, and then we just drift. So, you know, buying higher has not been good. Okay, I've ruined my day twice in the past, you know, 5 days because I've been in a good position. I thought it was going to go. I added to it, and then it hurt my average cost. That's not working. Pressing after a move lower also is not working. You know, buying that dip has been better. So, you know, the quicker you figure out what's working as the market changes throughout the charts, you know, the better you'll be and the less frustration you'll have. And at this point, you know, it seems as if, you know, the bears could have, you know, really pressed and they didn't have the power to, just the same way they could have pressed last Friday on the jobs report and they didn't have the power to. So until they actually do something like that, then keep looking for opportunities. And, you know, if you're getting a little worried because George Soros is now short the market, do a little research. You'll see that he started shorting the market probably around S&P 1980. In his filings a month ago, he said he was going 2 times in, and that was, I think, at 2070, and here we are at 2110. So if you follow George Soros as an active trader, shorting the market this whole way up, you wouldn't be watching this because you'd be blown out of the water. You probably wouldn't have the solvency to stay with it. So don't just follow the big names and do what they do because he was right in 2007. Okay? If the market's going to correct and he's right, what do we have to do? We have to break and close below the 8 and 21 day. That would get you away from risk on to risk off. Then we have to get below the 50 day, where you would probably test. We close below that. Okay, we have to get to the 200 day. And then if we get below the 200 day, stay below the 200 day, 3-4 sessions, then we're back in the bear market. So don't be a predictor of when things are going to switch up and change. Measure the action and stay with it because you can't do the same thing as some of these bigger guys who could stay with something for multiple months or years, and who knows if they really are. Okay, like today, Icon was on CNBC, and all of a sudden he was I think he said that was net long, and the articles are making it like he's 150% short. So look at what's in front of you. Don't look at what everyone else is doing. And until we see complexion changes and it really stands out, let's try and ride this, looking for good chart patterns versus just the top. Have a good night, and I'll see you tomorrow.